Hello, I'm Kamal Santamaria. This is Counting the Cost on Al Jazeera, your weekly look at the world of business and economics. This week, below zero. We take a walk through the looking glass into the world of negative interest rates. Why is the president of the European Central Bank using them? What does it mean for savers and the whole financial industry? And why are economists taking a less than positive view? Also this week, more on Apple versus the FBI, with the US government escalating its war against the technology giant over iPhone privacy. The tech industry is not happy. We'll look at why this case could have far-reaching implications not only for Apple, but for tech users all over the world. And in Afghanistan, merchants, including the makers of Herat's famous blue glass, are actually optimistic about business, and it's all to do with the lifting of sanctions on Iran. Imagine a world where you have to pay your bank to keep your money in your bank account. It sounds completely counterintuitive, but if you live in the Eurozone or even Japan, then you're in a world where this very scenario exists. That is because central banks have cut interest rates to below zero. It now costs to park money in the central bank overnight in these regions. And what do we call these fees to keep money in accounts? Negative interest rates. The curious thing is, economists had long thought negative interest rates are impossible, but just this past week we had the European Central Bank slashing interest rates across the Eurozone to a new record low of zero, down from 0.05%. And it pushed the deposit facility rate, which we were talking about earlier, deeper into negative territory. It's now minus 0.4%. from a previous rate of minus 0.3%. So we want to examine this upside-down world of negative rates a bit more. The European Central Bank isn't the only one using them. Central banks in Denmark, Switzerland, Sweden and Japan have all cut deposit rates to below zero. This mainly affects commercial banks, which deposit money in the interbank system, not so much the bank customers. And so far we haven't seen any mass withdrawals, but remember, we're not that deep into negative territory here. Now, when interest rates turn negative, depositors actually pay the bank to keep their cash safe. This is the equivalent of paying to save money, which I know sounds ridiculous. So why would you do it? Well, we inhabit a world where central banks are running out of options to stimulate growth. So basically, it's all part of a plan to encourage banks to stop hoarding money and start lending to businesses and boost inflation. In both Sweden and the Eurozone, inflation is well below target. Negative rates also have the side effect of lowering the value of a currency. That makes export industries very happy. Keeping a lid on currency gains is a major concern in, for example, Switzerland and Denmark. But there are dangers, because everything is built on an assumption of above zero interest rates. Going below zero could change the very way in which money flows through the economy. There was even a warning this past week from the Bank for International Settlements about this very issue. And don't forget, banks also find it difficult to make profit in a negative rate environment because, well, interest rates are how they make money, aren't they? Well, this is something which needs some more investigating. Can negative rates work? Greene's going to help us out with that. She's the chief economist at Manulife Asset Management, based in Boston, but joining us via Skype from Washington, D.C. Megan, the ECB didn't go negative, but it went to zero. What do you make of a move like that? Is it desperate times calling for desperate measures, or does it actually make sense in the long term?
It makes some sense in that the ECB is really concerned about bank balance sheets, and cutting deposit rates further into negative territory would really eat into bank profitability. It's something Mario Draghi's been thinking a lot about, particularly off the back of the Bank of Japan's cut into negative interest rates. So it makes some sense that they would tinker with other policy rates to ease while still not eating into bank profitability.
We're really delving into negative interest rates on this program for the first time, and I think we'll be introducing a lot of our viewers to it for the first time. Just tell me your feelings on them. Do the positives outweigh the negatives, or is it risky territory regardless?
Well, we've had really mixed results with negative interest rates, I think. We have seen since the ECB cut into negative territory that lending in Italy and Spain has actually improved a bit. But generally, like I said, it really eats into bank profitability, and that's partly why you've seen so much volatility in equities for European banks, Japanese banks, even U.S. banks to a certain degree. So it does really hurt bank balance sheets. The idea is that instead of parking money overnight at the ECB, banks should go out and lend. The issue is that only really addresses if it's a supply side issue. The problem is it's really a demand issue. So there isn't a whole lot of demand for this credit that the ECB and other central banks are trying to force. If you don't have demand, there's nothing a central bank can do about it.
So you're saying the theory is good, but in practice we have to be more cautious. Is that how we look at it?
That's right. I think in theory it's a nice idea. In practice, it isn't working exactly as policymakers had really hoped, and they can keep cutting further and further into negative territory. It will keep eating into bank profits, but also at a certain point, people will just want to hold cash instead of having these negative interest rates eventually passed on to them by the banks. And so they do have kind of a stop. No one knows exactly what that rate is, but banks can't go on cutting into negative territory forever. So there are real limitations to this policy as well. And if they continue trying and it continues not working, they're going to have to come up with something else. The issue is they've tried most things. So I think the only thing really left on the table for most central banks, including the ECB, to try is some kind of helicopter money. I just don't think we'll get there unless we see another global recession, because it's really politically toxic and kills off any kind of central bank independence.
Okay, helicopter money, is that like quantitative easing? Can you explain that to us?
Sure. So it's in essence, it's permanent quantitative easing. So instead of pushing liquidity in the system to be drawn out at a future date, which is what quantitative easing is, it's just pushed out into the system. And it can take a lot of different forms. Tax rebates is one. It could just be a transfer into people's bank accounts. The idea is you just put money in people's hands directly and tell them they need to spend it by a certain time, ideally. And sure enough, they will. So that is one surefire way to go about getting money into the system and boosting inflationary pressures, of which we have, unfortunately, very little at the moment in the Eurozone, but also globally.
Megan, seeing as you're in the States, I might just ask you about rates there, because we finally saw that move upwards from the Federal Reserve earlier in the year. But Janet Yellen didn't rule out a rates cut either, did she?
She didn't rule out a cut. I mean, I think that the Fed's been kind of all over the map in the past couple of months. There were a lot of calls for hiking rates in September. When they didn't do it, some people said they were too late. And then a month later, everyone was saying maybe the Fed would have to go and cut rates into negative territory. Now, I don't think that's going to happen unless the U.S. tips into recession, which I think is pretty unlikely at this stage. The consumer in the U.S. still looks fairly strong, and the consumer's driving the recovery. So that's unlikely to change in the absence of a policy mistake. So I still think it's more likely that the Fed will be hiking next rather than cutting. But the problem is, if the Fed hikes too quickly or too much, then they will have to go ahead and reverse course and start cutting. And in that case, actually, they would really undermine their own credibility.
Megan Greene, a pleasure talking to you on a tricky sort of subject. Thank you for your time. And still ahead on Counting the Cost, we talk hospitality with the president of Shangri-La Hotels and one of his star employees. So this is Shang. She's the resident falcon at the Shangri-La Hotel in Doha, which is just opened, and she's actually a member of staff. And if you think I'm joking about that, I'm not, because I've got her ID card here. It's got her staff number on it. She's a member of the front office concierge team. She's here to greet people as they come in through the doors. She works 9 hours a day, just like everyone else. She gets regular breaks, flying breaks, instead of perhaps a lunch break. And, well, maybe we'll just ask her. So, Shang, how is it here at the Shangri-La? I hope they're looking after you. Benefits good? Healthcare? You know? Maybe not. Well, we'll be talking to the CEO a little bit later. He might have a little bit more to say. Yeah, we're going to look at that a little later. Right now, though, the ongoing battle in the United States between Apple and the FBI, because it's not going away in a hurry, and the implications have moved far beyond this one case. As a quick reminder, this is how the situation stands. It's all about an iPhone belonging to one of the so-called San Bernardino shooters, Farouk Malik. 14 people were killed in an attack back in December, and the FBI believes there could be valuable information on the phone. But it's locked with a passcode, and so it's wanting Apple to create a workaround which would allow them to use what's called brute force to crack the passcode. Essentially, the US Federal Bureau of Investigation has ordered Apple to hack into one of its own products. Now, Apple CEO Tim Cook is fighting the order. He calls it a dangerous precedent. He says the data security of hundreds of millions of law-abiding citizens is at stake if they start creating backdoors to their devices. So with neither side backing down, one court order has basically turned into a fight of digital security versus national security. And joining that fight are dozens of technology companies, including Microsoft, Yahoo and Google, who've come out in support of Apple. And you know, even the United Nations has had something to say about it, speaking of a case that could set a precedent for civil liberties, privacy and the cyber economy as a whole.
In order to address a security-related issue linked to encryption in one case, the authorities risk unlocking Pandora's box that could have extremely damaging implications for the human rights of many millions of people, including their physical and financial security. And this is not just about one case and one IT company in one country. It will have tremendous ramifications for the future of individual security elsewhere.
And that's what most people seem to be saying here, that this is about more than just Apple. Joining us from Washington, D.C. to discuss that is Ross Shulman. He is the Senior Policy Counsel at the Open Technology Institute. Ross, the Apple situation itself seems to be in a bit of a lull at the moment, isn't it? So maybe you can bring us up to speed. Where are we in the case? Is it just a stalemate situation where both sides are refusing to budge?
Well, so that's basically where we are, yeah. What happened just last week was that a bunch of different groups filed what's called an amicus brief or a friend of the court brief in the Apple case at the very lowest level of the court system that we have here in the US. And so what will basically happen now is the judge in that case will think about it and issue an order sometime in the near future, but everyone expects that that order is going to be appealed pretty much immediately, and this will go up through the court system here in the US on the judicial side. And then here in Congress, in Washington, D.C., we've got plenty of folks who are talking about moving, but again, it's a bit of a stalemate and we're not seeing any actual movement yet.
Okay, so the bigger argument here, Ross, is digital security, an individual's digital security versus that of national security. And I don't even know how we really start to have this debate. It's such a big idea. It has strong arguments on both sides. And who on earth even makes the final decisions here? I know this case is before the courts, but this has become an ethical issue now.
Yeah, it is. But, you know, we're making progress by framing it in the way that you just framed it. So for a very long time, sort of the framing was, well, you can have national security versus privacy on the other hand. And it's really good to see this current discussion move beyond that framing. So what we're seeing now is much less of a privacy versus security debate, and we're recognizing that this is actually a security versus security debate, and that the trade-offs we're making are of the same kind. And so who can be qualified to make those decisions? Well, I mean, I think as a society we'll do it together. It's going to take some time, it's going to take some wrangling, but I am fully of the belief that at the end of the day, folks will realize that what we gain by having security of the data that we entrust to these amazing computers that we carry around in our pockets every day is vitally important, and may actually at the end of the day be more important than sort of the national security side of the equation.
Just go back a moment for me, if you would, Ross, and explain what you meant by security versus security.
What we're seeing in this very discussion is a question of, on the one hand, you know, a very easy to understand national security issue, right? We're worried about the shooters in San Bernardino. We want to know, were they working with somebody else? The FBI's sort of desire there is fairly clear cut. On the other hand is a more amorphous need on the part of everybody who owns an iPhone, or really any phone, frankly, to be able to trust that the device that they're carrying around in their pocket is secure. It's a digital security question, and it goes to the device in our pockets, but it also goes to our entire digital lives, which more and more are being led on these phones and also in the cloud. And it is a question of how secure are we going to be in those devices, because when it comes right down to it, if Apple creates this sort of vulnerability that the FBI is looking for them to create, it's going to be a target, right? Everybody's going to want a piece of it. Here in the US, you can obviously see that law enforcement is going to want to use it on a regular basis. But even beyond law enforcement, you can absolutely imagine that organized crime is going to want to have a piece of this. That foreign governments that perhaps are not as chummy with human rights or not as familiar with civil liberties are going to want to have it. And Apple, they're really good at security, but against an advanced persistent threat, as we say in the business, an APT, you can't keep anything secure forever. And that's the concern that Apple has, is that once they have this, you're opening a Pandora's box.
All right then, Ross Shulman, great talking to you on this topic. Thank you for joining us. To something and somewhere completely different now, Afghanistan, where merchants in some parts of the country are getting pretty excited about their economic future. Take a place like Herat in the west. It's close to the border with Iran, which of course is in the process of emerging from years of economic sanctions. Reza Saya has this report now on why that could re-establish the city as a leading trade hub and expand Iran's economic influence.
A molten blob of glass, a few gentle puffs of air, some masterful strokes of sculpting, and the finished product. This is how Nasrullah, one of the oldest expert glassmakers of Afghanistan, crafts the city of Herat's famous blue glass. He's done it for 50 years, but rarely, Nasrullah says, has he been more optimistic about his business, thanks to the recent lifting of economic sanctions against neighboring Iran.
We were very happy. We are always happy when things improve in Iran.
Nasrullah is among traders here who say sanctions against Iran damage the economy in Herat, Afghanistan's western trade hub that's long held cultural links to its neighbor and heavily dependent on products either imported through or made in Iran.
It's amazing when you walk around here how many products you find that are made in Iran. Look at this: laundry detergent, a dishwashing liquid, hand soap, glass cleaner, hard candy, chocolate, all of it made in Iran.
Even Iranian music fills the streets here.
It was hard. Importing goods was hard. Many items were smuggled. Now it's easier to get products.
When Iran was under sanction, it directly impacted Afghanistan's economy in a negative way.
Ahmad Saeed Azimian from Herat's Chamber of Commerce says the lifting of sanctions means more imported products bought legally with insurance, using money safely transferred through banks.
When merchants can use the service of banks, the price for the product goes down, and it means consumers pay less for the products with higher quality.
Traders here are also eager to use Iran as a transit point to export Herat's products. Its famous marble, dried fruit, spices, and Nasrullah's blue glass, potentially a badly needed boost for Herat and Afghanistan's struggling economy.
Finally this week, the hotel business. It's fast-paced, it's competitive, and it lives and dies by one thing: its reputation. It's also cyclical, from the seasons to economic upturns and downturns. So how do you make it all come together to create the perfect stay, if such a thing even exists? I discussed that and many other things recently with the CEO and president of Shangri-La Hotels, Greg Dogan. Shangri-La, a chain with its roots firmly in Asia, but growing internationally.
If you look at the way that the Middle East is going, Doha has become a destination in itself. You've got the World Cup coming here in 2022, which is obviously huge, but it's going to be another hub within the Middle East. Dubai, Abu Dhabi, Riyadh, Jeddah, and Doha. They're the big ones, and I think it's important to be here.
We talk about right here, because as I sit in this interview, Marriott Hotel there, W Hotel there, Four Seasons in Sheraton and Hilton and Movenpick behind me. The concentration of luxury hotels and five-star hotels is enormous here. So why would I come to Shangri-La over any of these others?
To me, first of all, the more the merrier. I think it's important to create a destination with more hotels. In terms of Shangri-La, we believe that we have our own identity, being an Asian brand, and bring a different offering to the whole market. And with our Asian hospitality and what we bring here, I think it's a little bit different to all those other brands.
Maybe actually just explain to our viewers where Shangri-La sits, because I've always felt of it as a business hotel. But then look at where we're sitting here in the middle of a city at what feels like a resort. Where are you on the scale? How do you define yourself?
I think in this day and age you cannot categorize it in any of those categories. I think the world has moved on so much that you have to be able to offer your offering to any market. Now, to say that we're ultra luxury or ultra budget, the market has changed to the mid-market. The world has moved on, and we've moved with that. So
Can you define that mid-market for me? What do you?
I don't think you can categorize it. I really don't think you can categorize it. I think as long as you're best in your local market and that you're available to all those people. And what we try to do is wherever we go into any location, we try to become part of the community. And we've done so here in a major way. We don't create a cookie cutter operation in terms of looks, feels and everything else. We've adapted to what the environment and what the hotel and what the city requires.
Let's talk about the hotel business then. We are quite possibly on the cusp of another economic downturn. It feels that way. And I would think that a luxury such as travel and hotels might start to go out the window a little bit then. What do you do in times of downturn? Because unfortunately we've all had experience of that in the last 5 to 8 years.
If you look at the cycles of business throughout since the Asian crisis, everywhere you go there's going to be something. Whether it's a calamity, a typhoon, a crisis, everybody's talking about different types of negativity. And I strongly believe in each of those markets, in each of wherever you are in the world, you need to adapt very, very quickly. And the key to any of the local management successes would be to adapt and get in different business at different markets, at different opportunities. And it's no different from here. And that's what I've encouraged all our general managers to do, is to adapt to what the market is requiring. I believe that the mid-market range throughout the world is increasing, so I see that as a huge potential. Okay, where one market may slow down, you need to adapt. But I don't see anything different that's happening right now.
So is downturn actually an opportunity?
I believe it is a major opportunity. You just have to look differently. And with the internet and the way that bookings are going on right now, you have a different millennial mindset where people are coming in and buying in, with a shorter lead-in time. And I think those are the opportunities that we have.
I don't quite follow what you mean there. You're saying because people are more mobile, they're traveling, they can book quickly.
It's exactly that. People can book more quickly. Lead-in time for a booking used to be 2-3 months, where people would be booking holidays, and now market is showing us that people will book in short times, as long as you give them what they need.
Okay. So you're not saying you don't feel that there's a... I guess I'm just trying to get a business person's perspective of these times of downturn. You've told me how you react, but I want to know how difficult or otherwise it is actually to operate in them, because the bottom line, it's your margins, it's your profits. Are there difficult times for you?
They're challenging, but wherever there's a challenge, there's an opportunity. It's easy to look at the negative and to turn the tap off, and I've always tried to get our general managers to be much more proactive and look at the upside of it. So it's not easy, but I don't see it as all doom and gloom at this stage.
Okay then. Tell me about your different markets around the world. You said you're an Asian brand, but you are pretty much everywhere as well. What's been the strongest performing for you?
We've seen a lot of outbound Chinese business that's gone into all the different hotels throughout the world. We see that as a major growth. The American market is still very, very strong. So outbound American into different markets. We see a lot of Middle East business going into Southeast Asia. So those are the 3 big ones right now that we see.
It's a good business to be in, isn't it?
The hospitality business.
Yeah, exactly. I was just thinking the way you described that, there's always going to be, whether there's a downturn in one part of the world or there's strength in the other part, it will always keep moving.
That's correct.
And you'll be fine somewhere, won't you?
That's right.
Yeah. What about the Middle East then? The importance of this market, seeing as we are here and you're opening up here.
Middle East, with what's happening in Dubai, with what's happening here, we're opening our 95th hotel here. We see it as a great opportunity. I see the Middle East as literally the center of where the world is moving to. I think with the great airlines that are in this region, it's going to go from strength to strength. And I'm very, very bullish and very positive about this region.
It's just funny when you mentioned airlines, I just thought about the price of oil. I was thinking price of oil can affect almost any business. The fact that the airlines can, move people around cheaper and all that, that's good for the hotel business as well, I guess, isn't it? Yeah.
We feel that way. I see that. In fact, only this morning I got a good friend of mine asked me, that prices of coming out to this part of the world from England are cheap, and which hotel would I recommend in this region? So,
That's a simple answer for you, isn't it?
Doha.
And that is our show for this week, but there's more for you online at aljazeera.com/CTC. That takes you straight to our page, which has individual reports, links and entire episodes for you to catch up on. You can also get in touch with us by tweeting me at KamalAJE, and do use the hashtag AJCTC when you do, or just drop us an email. Counting the Cost at aljazeera.net is the address. That is it for this edition of Counting the Cost. I'm Kamal Santa Maria from the whole team. Thanks for joining us. The news on Al Jazeera is next.